Hello guys, you're all welcome to my channel. This is the Exponential Moving Average E.M.A cash flow. In this channel, I'm going to be bringing to you everything trading. And in this particular video, I'm going to be focusing on a simple strategy. I call it the Exponential Moving Average crossover. The Exponential Moving Average crossover strategy. So, if you are new to Forex, and you don't know what we are talking about, just drop a comment in the comment section. Let me know so that we can begin the journey of trading together. And so Forex is not one of the get rich quick schemes out there. With Forex, you need adequate knowledge. You need to be endowed with much knowledge and much discipline before you can make money. So it's not a get rich quick scheme. So if you are trading, you should be ready, you should study. You'll need someone to mentor you, you need someone to guide you. So in this video of today, I'm going to bring to you a strategy that you can use. I'm considering that you are already trading Forex. And look at my chart. This is my chart. I have a blank chart here, no indicators. I have no indicators in my chart, and I want to show you a means by which you can trade synthetic indices. This strategy I'm showing you will apply in all synthetic indices. It also applies in the currency pairs, but I'm dealing here with Boom 1000 for this video. So my case study here is Boom 1000. Now the channel is blank and you want to trade. You've come to the chart. Where do you begin? Look at how the candles are behaving. Look at how the candles are behaving themselves. Where do you begin? What do you even do in the first place? Where are you even going to start? Are you buying or are you selling? What will you be doing in the market when you come like this? The first rule that you have to follow is the trend, to follow the trend. And I want to show you how you can know the trend of the market using E.M.A strategy, the exponential moving average crossover strategy. So what are we going to be doing? We are going to insert our indicators. We are inserting two indicators, the exponential moving average. So let us go at the top of our chart. Somewhere in the middle, you see the F sign. You click on that F sign. It takes you to this page. You click on F where there is this plus circle. You click on the F. Now you see indicators, you see trend, the trend indicators. As you move down, moving average, you select the moving average. Let us take the period is 50. You put the period to 50. Shift, you put it to 0. Method, exponential. Make sure it is exponential. Then apply to close. Style, you put 3 pixels. Then you apply. The color is black. Then you take done. All right, let's go back. You see, this is it. This is a moving average, exponential moving average 50, E.M.A 50. This is it, black on the chart. All right, then let us add another indicator, the exponential moving average. This time around, it's going to be moving average 200. So let us go again. We click on the F sign at the top. We click on the F with a plus circle sign at the right here. Then we take moving average. Now we are going to change the period to 200. Period 200. Shift, it remains 0. Method, exponential. Apply to close. Style, 3 pixel. Then change the color to red. Let us change the color to red. You take done. Let us go back. You see, this is it. It has come. All right, so we have our two indicators, the exponential moving average 50 and exponential moving average 200 on our chart. So this is it. Where do you begin? Like I said, you need to know the trend of the market. And here we are. See, we are in the 1 day time frame. The 1 day time frame. And this is the best place I can advise you. You can go to the 1 week, you can go to the 1 month, but if you stay in the 1 day time frame, it will be good for you. At this point, you can know the trend of this market. So how do you know the trend of this market so that you can start trading? How do you know the trend of this market? Now, to know the trend of the market, just look where you have moving average, exponential moving average 50 and 200 crossover. So let me mark a point where I've seen a crossover. So this is a crossover here. I've seen a crossover at this point. All right, where I've marked here, as you see these round ticks that are coming on and off, that's where there is a crossover of 50 and 200. And when you see the 200 at the top and the 50 at the bottom, you know that it is indicating a downtrend, where the 200 E.M.A is at the top and the 50 E.M.A is at the bottom. It is indicating a downtrend. Now, for you to confirm the downtrend, you should actually see that the market has formed a lower low and a lower high. When you see it forms a lower low and a lower high, and it forms another lower low and a lower high, it's indicative that the market is trending. It's on a downtrend. So how do you trade? How can you enter the market from this point? You've confirmed the trend that it is a downtrend. And I said we should take the 1 day because the 1 day time frame is actually going to show us the long-term trend of the market. So now we know that this market is on a downtrend, because if you look from this point where there is that crossover, let us mark where there is this crossover, you see that the market has been trending down. This arrow, this red arrow I've just inserted now, is showing the trend of the market. The market is actually trending down. All right. So this is a downtrend. All right. For you to trade and make wins, make sure that you are taking sell entries when it is a downtrend. If it is an uptrend market, make sure you are looking for buy entries to be on a safe side. But at this point, how do we enter the market? Do we just jump and enter the market because it is a downtrend? We just enter a sell? No. What do we do? Now, at this point, we go back to the 1 hour time frame. So just click on the screen. You'll see this circle will come out with the signs, with these different signs. You click on H1, 1 hour time frame, and you notice the 1 hour time frame. Now, this 1 hour time frame, you notice that as we've come here, if we are applying the same strategy, you'll see that there is the crossover of 50 and 200 E.M.A. Look at this crossover here. This is a crossover, 50, 200 crossover. And like I said, when you see the crossover, you should wait for this movement, because the moment this crossover was taking place here, this market had sold. The market has sold might be right down to this point where you are seeing that I've indicated. So some people will say when you see the crossover, you enter the market. This is wrong. Supposing you saw this crossover here and you entered the market, you might have entered the market somewhere along this point. The market might be somewhere around here where you see this red arrow down here now. This red arrow down here. If you enter this market, imagine this reversal that has taken place from here. Let me show you the reversal from this point. Supposing you enter somewhere here, this reversal could have put you into huge losses. And if you had a small size account, it could have already blown you out of the market. So it is not advisable that when you see a crossover, you jump into the market. When you see this crossover, 200 and 50 E.M.A crossover, it is indicative of a change of trend. because initially you see this market was actually moving upward. Let me show you. This market has been moving upward. This is it. It has been moving upward. It has been moving upward up to this point. Then it started reversing. You see, it left from this point where it moved upward. Then it started coming down. Then there was this crossover. Look at the crossover. Those three ticks that are indicating on the chart there. That crossover took place, and some people say when you see the crossover, you should enter and sell, since it is the 200 has crossed over 50, and it is in the upside. Like we just said, that if you see this crossover and 200 is in the upside while 50 is in the downside, it's indicative of a downtrend. So some people will say jump into the market and ride the market and sell. But what if you were entering the market and the market was actually at this point? Because if you enter this market, that the market was at this point, this point down here, look at this point, because the moment this crossover was taking place, this market was already somewhere around this point where this indication is taking place. You see these three dots black that are coming out. So the market was somewhere around there. If you had entered this market, there could have been this kind of a reversal to come up like this, and it could have taken you out of the market if you had a small size account. So what you do is, when you see this crossover here, you wait for the market to reverse back, as this market sold right down here. Wait for the market to reverse back and test, because once there is this crossover, it will always come back to test 50 E.M.A or 200 E.M.A. So wait until you see that there has been a retest of the 200. The best way is to wait until you see a retest of the 200 or the 50. And when you see the retest of the 200 or 50 and the market reverses back as it tested this 200, if you look at this point where it tested this 200, let me show you. You'll see that there were some rejections at this point here, this point that I'm marking here. You see that it tested the 200 and there were some rejections there. Candles were rejected. All right. Now, with these rejections here, that indicates that the market is taking the direction down. So you see, from this point of rejection, the market sold down. So this is actually where you could have taken your entry, not at the point where the market actually had sold down and you saw the crossover. You wait for the market to reverse and test the moving averages. When it tests the moving averages and it begins to sell down, you look for your entry. And the best point to look for your entry is when the market has actually sold and a candle has closed below moving average 50. So let me show you. The market has tested 200 there, then it came down. Let me use the arrow to show you. All right, I'm using this arrow now. The market tested 200 here. You see it sold and came down, and you see that it closed at this point below E.M.A 50. Where you had this candle close below E.M.A 50, this is where you could have taken your entry to sell. Let me mark that point, the entry point. Let me show you the entry point. This is where you could have taken your entry at this candle. This candle here. This candle here. Where that candle opened, that's where you could have taken your sell entry, and you could have sold from that point. You could have sold from there right down to this point where you see the market sold right down here. So imagine this movement. So you could have sold right up to this point. So this is actually how you take your entry when it comes to this crossover. So you wait for the crossover. When you see the crossover, you wait for a reversal until the candle reverses and test the moving average. And when it tests the moving average, 200 or 50, and you notice that it has tested it and a candle has closed below moving average 50, exponential moving average 50, you take your entry and you begin to sell. So this is how you can trade the exponential moving average crossover. This is the best way you can trade it. Now, if you've listened up to this point, I believe that you must have learned something new. If you have any questions, drop them in the comment section. And please, if you've not subscribed to this channel, please subscribe, hit the notification bell so that when I upload a video, you'll be the first to receive the video. And make sure you like this video, share this video to as many as possible. This knowledge I'm giving out for free, so make sure you share the video. I look forward in seeing you in the next video, and if there are any questions, I'll be answering your questions in the comment section. Thank you so much and see you.